for our records. So good afternoon, everyone. Today is a very special treat for us. This afternoon, we have a chance to speak to an alumnus of MIT and a person synonymous in the world of investments, Dr. Mark Mobius. He's been sometimes called Indiana Jones or the Pied Piper of emerging markets, given his explorations, visiting several companies and being on the road, and his uncanny ability to call market turns, for example, the Asian crisis and the Latin American crisis. Mark has, for the vast majority of his career, worked for Franklin Templeton, which today has about $1.5 trillion in AUM, and was handpicked by the renowned value investor Sir John Templeton to run the Templeton Emerging Markets Fund starting in the 1980s. Just remember that this is at a time when emerging markets were called third world countries or less developed countries, and many countries at the time did not even have stock markets. So the word Indiana Jones certainly is apt. Purported to have been on the road for over 300 out of 365 days every year for the vast majority of his career, and even had Franklin Templeton provide a corporate jet to him for his travel to meet the companies around the world. Mark has written several books on the world of investing and has most recently launched a new AI-focused investment fund, which I know some of you will be very interested in learning more about. And certainly, Mark is looking for talent to hire. So if you, as we go into the discussion, and if you're interested, just drop me an email with your CVs and I'll forward it on to him and his assistant. For any budding MIT student, Mark's career branding is incredibly unique. There are very few people in the world of investments that can command the mind share that he does, and his singular focus on the investment idea generation and returns is absolutely incredible. For us, this is a particular treat because it gives us a benchmark of what is possible in our own lives. So before I hand over to Mark for any opening remarks, just from an administration perspective, following this welcome of Mark and subsequent opening remarks from him, I will ask a couple of brief open introductory questions to set the floor for the call. After these introductory questions, we'll quickly move over into the most important part of the call. That's questions from you, the students. I wanted to give a special thanks to Francis Perigo and the Career Advising and Professional Development team for the efforts in organizing today's event. This event is a joint effort between CAPD and the Brassard Investment Fund. I especially wanted to thank Telis Bertsekas, head of the MBA Finance Certificate, lecturer and the champion of the Brassard Investment Fund, and the entire Brassard Investment team for the support in making this happen. Just a little bit of background about the fund. The Brassard Fund is a nonprofit long-short equity hedge fund that is run by undergraduate graduate students at MIT following the completion of an educational program. The fund itself provides a hands-on learning experience on how to look for and invest in companies and has been developed in line with MIT's ethos of mind and hand. So if you've not looked into it, students, please absolutely do. This is really a life-changing place for you if you're interested in the world of investments. I also wanted to thank the Investment Management Club, the VCP Club, and the ETA Club for the supporting and helping us setting up this event. So there's much we stand to learn from Mark in this coming hour. So it's a pleasure to you, Mark, and over to you for opening remarks from your end.
Well, thank you very much. It's really a pleasure and an honor to be speaking to the group at MIT. I know I'll be speaking to a number of brilliant people, and I think I probably will be able to learn more from you than you from me. But in any case, it's really great to be back. It's really interesting if you go back to the time when I was at MIT. You mentioned, these emerging market countries were considered they were called the underdeveloped, the South, the poor, et cetera, et cetera. All the names were not very flattering, that's for sure. But it's interesting to note that the professors with whom I was working at MIT were all, almost without exception, involved in trying to solve the question as to why countries are poor. In other words, how can countries become richer? What can they do? And one of the professors said, well, you got to build a railroad, then that'll help countries to begin to grow, or you got to build a power plant. One of the professors, Everett Hagen, said you've got to raise the children in a certain way. You know, he was talking about the Protestant ethic, and of course that Japan sort of put paid to that theory. But anyway, there were lots of theories at that time, and they were working on this question. And the wonderful thing is that when I look back, I realized that they were not on the right track at that time, but finally they did get on the right track, and that was to the solution to solving this problem of having a country grow was to create a market economy. In other words, create an economy where companies can independently grow and thrive on their own, and also have a stock market where you have a market to raise capital. And of course, that's the story of my life with emerging markets, because that's exactly what happened over the years, starting in 1987, when we started the very first emerging market fund. We only had 6 markets in which to invest. All the other markets were closed. And most of those were in Asia. It was Hong Kong, Philippines, Singapore, Malaysia, Mexico was the only one in Latin America. And now, of course, we were looking at 70 countries around the world with capital markets, with stock markets. So it's been quite an adventure. And of course, the adventure continues. But in any case, look forward to your comments and questions.
Certainly, and have with myself, like I've been born and brought up in Kenya, so I've seen some of that. So certainly, harking back to exactly what you've said. So Mark,
Wait, and
you
by the way, they're talking about Kenya. There's one advantage that these emerging countries have had is that they don't have the burden of excessive legislation and restrictions. And as you know, in Kenya, Safaricom was able to create M-Pesa, this incredible payment system, which I don't think could have been done in the US because of the regulations of the US would have prevented the growth of such a payment system. So that's one of the great things about emerging markets, that you can go in and do things that you might not be able to do in a developed country.
Yeah, I agree. And actually, Ethiopia is going through just that renaissance now. They've just added 40 million customers in 6 months into an equivalent M-Pesa type platform. But harking back to your MIT days and as you started your career, looking through the investment world and looking through MIT alums, you've had one of the most interesting careers as an investor and fund manager that any student from MIT can even hope to have. You've worked incredibly hard to make all of this happen. And not many people, even from schools such as these, will be able to achieve what you've achieved. Since you finished your PhD at MIT in 1963, which was completed, I believe, in just 3 years, was 368 pages, and spoke to government policy within the world of satellites, which is really the AI moment of the early 1960s.
Yes.
Give us a sense of what choices you made after you finished with your PhD. When did how did your world go into the world? How did your career go into the world of investments? How did you figure out that you're good at picking companies or understanding markets? And how did you start this conversation with Sir John Templeton? How did he come and handpick you and put you into a place where, to be handpicked by Sir John Templeton is not easy. And it's like, Buffett calling one of us up and saying, hey, why don't you come and work for us? I'm curious, how did you kind of position yourself, and give us a sense of your thinking over that period?
Well, when I graduated from MIT, I really didn't want to leave the university. I wanted to continue studying. I sort of became a professional student, and I ended up studying at the University of Wisconsin. I was interested in mass communications, so I had a scholarship to study there. And then one day on the bulletin board, I saw a poster which advertised a scholarship program to study in Japan at Syracuse University. It was sponsored by Syracuse University. And I took them up on that, and I was able to get a scholarship to do that. And that was a life-changing situation for me because it opened up my eyes to such a unique culture, something that was completely beyond imagination of what I had experienced up to then. Although I had visited Europe, I'd been in Germany and a few other countries in Europe, but other than that, Japan was such a change, such a shock. And I decided I wanted to work in Asia from that time on. And then I started doing work in survey research, studying consumer behavior with a company called International Research Associates. And I did that in not only Japan, but in Korea, in Thailand. And then I left that and joined Monsanto in Hong Kong. They had a new enterprises division looking at all kinds of new products. And one of them was a high protein drink. And I started doing research on that drink. By the way, it was not a very good drink because they were trying to achieve 3% protein, just like milk. And of course, to do that, they had to add this soybean powder, which settled down to the bottom. And they had all kinds of technical problems anyway. Of course, nowadays they've been able to solve that, but in those days they couldn't. And I was too honest in my research and told them that people were getting sick when they drank this drink when I did surveys in Singapore. And that was the end of the project, and I was out of a job. So then I started a consulting company, and that took me all over Asia, working for people like Volvo, looking at dumpers and trucks and that sort of thing. After that, I decided that it might be interesting to look at the stock market. And one of my projects as a consultant was to do a stock market survey. And that got me interested in the market. Up to then, I really had not looked at it. Of course, when I did my thesis on communication satellites, I did purchase shares in Comsat Corporation that did fairly well. But other than that, I wasn't really involved in investing in stocks. But then I joined a brokerage company in Hong Kong, Vickers DaCosta, and started company research, which is, research was down my alley anyway, so that didn't create a big problem for me, big challenge. And they sent me to Taiwan to open an office. That led me to join as a board member with an international fund management company in Taiwan, the very first one, International Investment Trust, it was called. And I did that for a few years. And then John Templeton approached me about this new emerging markets fund, and that's how it started. And I remember at the time telling John Templeton that I wanted to have an office in Hong Kong, which, John Templeton didn't like to spend money. He was very frugal. He had only one office in Nassau, Bahamas, and then they had an office in Florida for sales. Other than that, that was it. So I opened that first office in Hong Kong, and the rest is history. We just expanded from there, and it really grew very rapidly from then on in.
So when did you get a sense of, you had a knack for understanding companies, you had a knack for figuring out things which others perhaps were not seeing. And within that, in your interviews, you've mentioned that you've always tried to get your analysts to look at the 5-year future of a company at the minimum. I'd love to get a sense of, how is your thinking different, or, how did you structure your team in a way that they were able to think differently, or at least look more at the long term?
Well, it started first with John Templeton because he was a fundamental investor. In other words, he believed in looking at the fundamentals of a company looking at the balance sheet, the profit and loss statement, and also interviewing or speaking to the managements of companies. So that was really the focus that we took. In other words, we looked at the financials first, but then we started talking to the managements of companies. So that was definitely a built-in sort of approach that we took. The difference, of course, was that I was dealing with companies in Korea, Taiwan, Thailand, Malaysia, Brazil, Mexico, and of course, these were all different cultures, different ways of doing things. So I had to start all over again in many ways. And I realized that the only way I was going to be successful was to get out and travel and meet these people person to person. So I did extensive traveling all over the world in order to do that. And it wasn't easy, of course, going to some of these countries. But that really paid off because with an understanding of the people behind the companies, I was able to get an insight into in what direction the companies were heading. Of course, we made mistakes along the way. It was not always easy pickings, but this approach really paid off in a big way. And that was sort of a departure from what John Templeton was doing, because he had the advantage, of course, of focusing mainly on US stocks. Although he was an international investor, he invested in other countries in the UK. He was investing in Japan for a while, but there was a lot of information available. For emerging markets, there was no broker reports for most of the companies. There was no easily available information. And that's where we had to dig and dig and dig to find out what was going on. So it was really a matter of doing that and also keeping an open mind and an approach that was, you might say, a curious approach, keeping an open mind and being curious about how people lived, what they were doing. And I think that really paid off.
Cool. That's awesome. And I'm sure there'll be questions coming back for that. I wanted to just draw on a thread that you mentioned of markets where there were no broker reports. There were annual reports of companies that you need to dig up. In your universe of companies that you look at, there are thousands of annual reports. There are legal matters that you need to look at, different jurisdiction, market rules. How did you build that team around you? B, how did you whittle down that information flow to yourself to just what is crucial? Because the amount of information that is probably competing for your attention is extreme. How much did you focus on reading in a day versus talking to people? And how were you able to get a sense of what is relevant and what is not in terms of your day-to-day stuff?
Well, as we started with the Hong Kong office, then we started expanding in other parts of the world. We ended up with 16 offices in emerging markets. We were in Singapore, Malaysia, Thailand, Turkey, India, South Africa, Mexico, Brazil, Argentina, and many other of these emerging, and including Moscow, by the way, when Russia opened up. So what I decided is that in opening these offices, I wanted to get at least 2 analysts each place who were native, were local, but had some overseas education. So I was able to put together a terrific team. It was a total of about 32 analysts around the world. And these analysts were able to give me some insight into what was happening on the ground. In addition, they were able to help us open doors to some of the companies in which we were interested. They spoke the local languages and so forth. So I think that combination of having a global view, but also having a local view with these local analysts really paid off. That gave us an edge, so to speak, that probably other fund managers did not have.
Cool. And for there too, I think there'll be some follow-on questions. Now, my third and final question for you, before we open up the floor, is really to focus on your new AI fund. We mentioned your PhD, which was the AI moment of the early 1960s. And you surprised all the markets when you said that you're launching a new AI fund. I mean, most people like, Mark Mobius is retiring and so on and so forth. And all of a sudden, there's a new AI fund on the horizon. What has made you change from emerging markets and that entire world of your career into AI? What are you seeing that is so different? One. Two, you've often spoken about your focus on return on capital employed of at least 20%. A lot of these AI firms right now will not be generating anything close to that, and there's no track record of returns there for a number of them. How you think about it? But secondly, within this question, I'd love for you to just speak about the talent you're looking for. We have a number of MIT students here. I've asked anyone interested in the AI space and investing, the joint space of AI and investing, to be on this call. So give me a sense of what sort of talent you're looking for, and certainly I'm happy to take on their CVs and forward them on to you as and when they send them through.
Oh, thank you. Well, first of all, let me clarify. The fund is not designed to invest specifically in AI companies. The fund is designed to use AI to first locate possible bargains, analyze those bargains, analyze the environment in which they're operating, analyze the industry, and so forth. So in other words, we want to use AI as a tool to help us improve our investment system. The beauty of AI is that it enables us to cover a wider range of information sources at a much faster pace than ever before. So that's the reason why I call it an AI fund, in the sense that we're using the so-called quantamental system, where we're looking at the quants side of things using AI, but also using the individual mental approach to pick and choose where we want to go with the fund. So we're interested in people who can use the tool, the AI tool, to do this work, locate opportunities, analyze those opportunities, and execute the opportunities. Now, the incredible thing that we found is that nowadays in emerging markets, technology is becoming more and more critical and important, and they're making incredible strides in improving their technology. So a lot of the focus of the fund will be on companies that are using technology to improve their operations. And of course, AI would be one part of that. So it's a very exciting prospect in my view. By the way, another aspect to this is we talked about emerging markets. And when we started in 1987, it was very easy to define an emerging market because they were all the low and middle income countries as defined by the World Bank. Nowadays, many of these countries have emerged. I mean, is Korea an emerging market the way it was in 1987? No, it's much more advanced. And you can go down the list of other countries that have really emerged. The other aspect is that many of the companies listed in New York and London, in Frankfurt and so forth, are achieving a bigger part of, or maybe most of their earnings from so-called emerging market countries, China, India, wherever. So what we are doing is calling this fund not an emerging market fund, but an emerging opportunities fund, which will enable us not only to look at emerging markets, but also companies that have a big share of their earnings and profits in emerging markets, even though they may be listed in New York, London, or wherever. So we're widening the scope, let's put it that way.
That's fascinating. And as an analyst, I don't know if I should be worried or excited about these kind of investments. So let's open up the floor to questions. To raise your to have questions, please just raise your hand. You can put it in the Q&A box, but we prefer to have an interactive session. So if you have any opening questions, please go ahead and raise your hands now. Yep, Carl, do you want to go first?
Um, I guess my question was, I guess, what made you decide to move towards this like emerging opportunities market now, um, instead of like before, or like what made you start the fund, this new AI fund at this time? I mean, I could see the ideas of like globalization, since a lot of markets are um, going into like using emerging markets within their companies, even though they're listed in non-emerging markets. But I was just curious as to what you decided to do this now.
Yeah, the reason why I decided to make this change is that the market had changed. I noticed that many of these companies that we were looking at were actually in emerging markets in terms of their profitability and their earnings and turnover, but were not listed in emerging markets. So I decided, look, let's widen our scope and look at all of these opportunities. I'll give you one example. There was one company that we were looking at, which was a software company. They were listed in New York, but all of the staff were in Ukraine, Russia, and other parts of the world. Now, the question was, is this an emerging market company or not? So that's an example of where we were able to find a fantastic company, great earnings growth, very successful, but actually with most of their staff in emerging countries. So that's the reason why I've decided to make this change. The good news, of course, is that with this new approach, we widen the scope. We don't restrict ourselves to just the emerging market companies. We widen it into the US, Europe, and other parts of the world.
And do you think like with, I guess, those changing markets, a lot more companies will start to do these kinds of activities where like even though they're based in a certain country, they'll have a lot of their employees or situations outside of, or like outside of the countries that they're based in.
Exactly. You're seeing more and more of that. And by the way, we work, I'm now in Dubai, for example, but we travel constantly, and we use WeWork offices in different parts of the world because we're on the road. It's a mobile situation now globally. People are on the move, and they're working from different parts of the world. So that's one of the great things that technology is bringing us. We're able now to move and to be in different parts of the world at different times and able to meet people on the spot, which is really a big advantage, as I mentioned before. So yes, we're thinking of investing in a completely different approach, where we're not just sitting in an office and picking stocks, but we're really moving around the world and being mobile and flexible. So it's very, very important.
Yeah, the last question. And within, so with these like shift in analyzing these markets, then I guess like as an analyst, would you have to consider the different markets, not only like within the country that you're we think the company might be based in, but also like the different connections in the different companies that it might be working in. How would you, I guess, like advise someone to shift their understanding of what kinds of markets to really look at?
Yeah, that's a very, very good question, very good point. One of the advantages of AI, by the way, is that we can now widen our scope of the number of variables we look at. So, for example, let's say we're looking at a company. Yes, we've looked at the balance sheet, profit and loss statement, we've interviewed the company, but what is the internet chatter about this company? What is the internet saying about this company? Where is the information flow going about this company? This is something we can now access at a very fast pace with AI. So, in other words, we're widening the scope of the variables we look at, rather than just looking at, the balance sheet, profit and loss, the financials, even looking at the people themselves, but widening the scope to look at the industry in a more intense way and looking at what the public opinion is about this company. Because at the end of the day, prices in the stock markets are driven by people, and these people have emotions. So the emotions are really what driving a lot of these prices. And we've got to try to get an insight into that by surveying the market in terms of the communication market globally.
Thank you so much.
Thank you.
We have two raised hands. Joy, do you want to kick off with your question?
Yes. Mark, thanks for joining us today. So something I was curious about is from my experience, from the fundamental side and the quant side of the industry right now, even having a casual conversation between the two sides is a bit taboo. And now you're doing this quantamental new venture. So how do you think operationally about, as you're embarking on this AI venture, just organizationally bringing in the right people to bring two pretty separate sides of the industry together and have as few frictions as possible while building it out?
That's a very, very good question, and one that I'm sure we're going to be challenged with as we go forward, because those people will say, look, let's depend on what the computer is telling us, what AI is telling us, and we just rely on that. And because you've heard about a number of very successful hedge funds that apparently just rely on what the computer is telling them. But by the way, I recommend a very interesting book called The Fund, which talks about, one major hedge fund, which is supposed to have been based on only computer analysis. But at the end of the day, if you read the book carefully, you'll find out that a lot of human judgment was playing a part in the way this fund was being run. So I think we've got to bring these two different concepts together. In other words, at the end of the day, yes, the quant will be very, very important in feeding information to the people making decisions. But finally, someone has to call the shots. Someone has to make a decision based on some emotional factors which are not easily accessible in the quant world.
Gotcha. Thank you very much.
Kaveh, do you want to go next?
Hi, thank you so much for joining us.
Pleasure.
I'm Kavya, and I am a sophomore here studying AI and finance. So you can see how I am pretty interested about the work you're doing now. And I also grew up in a couple of emerging markets, as well as rural Iowa later. So I'm particularly interested in the work that you've done in the past and are continuing to do. So I have two questions. The first of which has to do with trends around AI in the industry now. I recognize that your fund is more of incorporating AI to make investment decisions, but as a knowledgeable investor, I wanted to, see your perspective on how AI is shaping investments. So, what are the specific sectors and industries, in your view? What specific sectors and industries do you believe hold the most promise for growth as a result of AI? And then, what are some potential underappreciated impacts of AI in emerging markets?
Right. It's very, very difficult to define a particular industry that is benefiting more than any other industry in AI, because we're finding whether it's a service industry, whether it's manufacturing, whether it's transport, they're all exploring and using to some degree an AI infrastructure. What I've found now, particularly in emerging markets, is that it's extremely important to focus on companies that are using not only AI, but technology generally. In other words, bringing technology to bear to improve their efficiency and their profitability. So what we do is we say, okay, I'm open to whatever industry it is, but I want to know what they're doing in the technology area to improve their operations. And that technology could be AI, but it could be other areas as well. So it's a very interesting development, particularly in emerging countries, where you're seeing some companies surging ahead as a result of their use of technology. And that's where we want to focus at the end of the day. By the way, what countries have you lived in?
I lived in India and Singapore for
Okay, great.
4 years each. Yeah.
We were in India a few months ago, traveling all over the country, and it was quite an experience.
Yeah.
And of course, as you know, India is a big focus for us because we found that India has some incredible profitable companies, and it's a big focus for our orientation.
Mhm. And what you said earlier makes a lot of sense, because I relate that to the Brasstroud Investments Fund. And we find that across sectors, whether it's like even outside of tech, so in healthcare, industrials, and consumer sectors, a lot of our analysts gravitate towards tech-focused companies that are leveraging new technologies to advance their businesses or become more profitable. So
Exactly. And and it doesn't have to be manufacturing, it can be in any sector. And in the service sector, it's become very, very important to use technology. So that's where we want to focus. So it's really interesting. On the one hand, we're using technology to improve our business, our investment business, but we're also finding companies that are improving their business with technology.
Mhm.
By the way, when you consider the emotional aspect of investing, I enjoy going to look at entertainment that uses AI to some extent. And when in Singapore, I was at the Taylor Swift concert. And of course, there's a great example of where Taylor Swift has used technology to cover the earth and gather people together. And it was 50,000 people. I think it was 4 nights in Singapore, packed. And of course, it was a technological success in the sense of putting together all of the components of what's required to do such a concert. So that's the kind of thing we have to look at.
Yeah, it's really eye-opening when you hear about examples like that, because it seems like you can find impacts everywhere of technology.
Exactly.
A lot of places to keep looking. Yeah, thank you very much.
Thank you.
We have 2 questions from Sofroni, but I think they're partially answered. But before we answer those questions, Mark, just tell us a bit more about what talent you're looking for MIT is a very rich hunting ground for young people in the AI/investment space. I mean, the Brasret Fund has so many people from ComSci who are looking at the world of investments. We have the talent. We can bring them to you. What are you looking for? When do you need them? And, should they send their CVs on to me?
Well, what we need are people with a very open mind, willing to learn, willing to take in new ideas. And of course, people, of course, if they've been to MIT, they obviously have the education and the technical skills. But to bring to bear those skills into an emerging country and emerging opportunities is really what we need. Someone with an open mind, somebody who's willing to travel, to live abroad, live in Singapore or Dubai or India or wherever, and somebody with experience traveling and working abroad. That would be most important, I would say.
And anything specific to the technical aspects of AI and kind of LLMs, and I mean, I'm not
think-
that technical anymore, but just give me a sense of if there's any specific technical expertise you're looking for.
Well, obviously, a mathematical background it helps, but it's not really essential. It could be somebody who's got a background in chemistry, in physics, in any of these disciplines where they can analyze situations and put a mathematical model together to model these situations. I think that's important.
Cool. So for the youngsters who are on the call, I always say youngsters, but I'm not that old. But for anyone who wants to send through their CVs, just send them through to me. We'll get you the email address after this call, but you can dig it up from the MIT address book. Send over your CVs. I'll forward it on to Mark and his team, and they will get back to you at the appropriate time. So we have a couple of questions from Sofroni. I think they've been partially answered, but I'll just ask them anyway. Is this AI fund targeting emerging opportunities only? That's the first question. And the second question is, will AI play an important role in gauging, quantifying investment sentiment in the future?
Yeah, the last point is very, very important from my point of view. I believe that's one of the overlooked areas where in the past it was very difficult for us to assess let's say the emotional impact of a company's behavior and stock market behavior. Now with AI, we'll be able to capture some of that through analyzing internet chatter, analyzing public statements, et cetera, et cetera. So I think that's going to be a very critical part and an additional AI component, let's put it that way. The first question, we're not specifically going after AI companies, but we're using AI to analyze companies, to locate companies that have good potential, and then analyzing them and then following through with the investment stages. So in that sense, we think that AI will be a tool to do this work rather than having the emphasis on buying AI companies themselves.
All right, cool. Tell us.
I wanted to make sure the students got all their questions in, but before I ask this is a little bit of a broader question. We hosted one of the co-CIOs from Bridgewater a few months back, and
Oh, yeah.
she gave kind of a multi-decade view of what's been happening in terms of globalization and inflation, and the idea that for the last however many 40 years, every dollar you invested was deflationary. You moved things from high-cost areas to low-cost areas, and it naturally brought down the friction and the cost of trade and doing business. In her view, that's changing now with a move away from globalization, and perhaps a world that is slightly more inflationary and conducive to higher cost of capital. I'm wondering if you kind of agree with that long view, and I wonder how you view kind of the world having more friction in it from geopolitics, trade, et cetera.
Right. By the way, I recently did a book called The Inflation Myth and the Wonderful World of Deflation. So it's your question is right down my alley in that sense. And in the book, what I point out is that, hey, inflation is going to be with us forever, as long as we have currencies, because governments continually print, and they therefore devalue the currencies. However, the good news is that as a result of technology, we are actually in a deflationary environment. And I think she was probably referring to that in the sense that trading has become much more efficient. Many other things have become much more efficient and easy than they were before. I mean, I gave the example of my thesis. I was typing my thesis on that electric typewriter. Today, hey, it would be so much easier to do it. So that is where we are in the world. We're actually in probably the most glorious periods of mankind's history, because things are getting better. Now, of course, you're going to get all kinds of conflicts. You're going to get all kinds of tensions. And partly as a result of technology, countries are going to be able to create more destructive weapons. So that's the bad news. But at the end of the day, we've got to look beyond that, because if a world war broke out, the game is over anyway. So, we just can't think about that. We just got to continue to do what we're trying to do in a good way and improve the lives of people around the world. So in some ways, I agree with what she was saying, that we are in a very tense period of mankind's history, but beyond that, we are in an incredible period where things are really getting better for the world and for all of us. I mean, just look at the longevity of people. People are now, partly as a result of the technology that the people at MIT have created, people are able to live longer with the new medicines, the new technologies that have been created. So I think this is going to be, we're looking forward to really some great things going forward.
Do you think that over the next decade, the incremental return on capital relative to cost of capital can be as robust as it's been in prior decades? And if so, what might help that to be true?
I think, yes, we can get a better return on capital as a result of technology, because of course there'll be winners and losers. There's no question about that. But the winners will really be big winners. And you're seeing that now recently with the rise of AI companies, the kind of prices they are demanding, and the rise in those prices is ample proof of this kind of situation. The bottom line is that we must be invested in equities in order to escape inflation, because companies are able to overcome inflation by rising prices above what the inflation rate is. So given that, and then added to that, the fact that these companies can use technology to further augment their earnings capabilities at a more rapid pace is very exciting. It's just quite amazing when you think about it.
Makes sense.
Thank you.
So we're coming up to the 12:55 mark here. I just have one final question for you, and that focuses on investing in hyperinflationary economies, Turkey, Argentina. You've seen companies in these economies that have done remarkably well, despite their currencies depreciating at the rates that they're depreciating. How should we as investors, and I ask this really more from a personal angle because of my exposure to Kenya and East Africa and Sub-Saharan Africa, how should we be thinking about companies with hyperinflationary protections and able to have purchasing power in those kind of environments?
Very good question. I was recently in Argentina, and things are looking up in Argentina. Milei hopefully will be able to introduce some kind of a policy which will dollarize the economy, but that remains to be seen. Nevertheless, we were investing in Argentina and Brazil when inflation was 2,000, 3,000%. And how were we able to do that? Well, what we were doing, of course, forget about earnings. Earnings numbers don't mean anything, but assets do mean something. So in those kinds of environments where you have hyperinflation, people escape the inflation by buying assets. And that's what we were doing. We would sit down with a company and say, okay, what assets do you have? Let's value those assets in dollar terms. And we were able to make money as a result of doing that, because once the inflation had come down, then it was quite profitable to sell those assets. So I think, again, as I mentioned, if you want to escape inflation, you've got to invest in companies that have pricing power. Those companies with pricing power will be able to increase prices far beyond what the inflation rate is. And that's where you want to be.
Thank you. Thank you, Mark. So that, I think, just brings us to the conclusion of the call. I just want to say thank you so very much. I know it's late there in Dubai. We really, really appreciate this. And thank you for coming back to MIT and supporting us and guiding us. For the rest of the students, tomorrow we have a talk with Monish Pabrai. He's another friend. He's a friend of Buffett/Munger. So looking forward to your attendance there. The video for this talk will be uploaded to YouTube in the coming days and weeks ahead. Mark, I will forward any CVs that come on to me onto you, and certainly hope we can get you the talent that you're looking for.
Okay, thank you all very much. I appreciate your time. Bye-bye.
Thank you.
Thanks so much, Mark.